And joining me in the studio now via Skype is certified financial planner Matt Frankel. Matt, how's everything going?
Just great. It's always good to be with you guys.
Yep. Well, another week, and we are definitely getting into earnings season here, so there's always a lot to talk about for sure. And we'll certainly be talking more earnings as the weeks go on. But I wanted to talk a little bit because we just had the Super Bowl yesterday, and we've seen some other articles here recently that are talking more and more about how sports franchises, stadiums, arenas, they're all leading this push for cashless concessions. And we were reading an article specifically was talking about Super Bowl 53 and also talking about the Tampa Bay Rays actually really leading that push. And it just this is something we talk about a lot on the show, of course, because it is a real market opportunity. It's something we've had a lot of success with the World Cash Basket. I just think it was an interesting article to read because from my perspective, anytime I go to one of those events, it seems to me like cash is just it's a hindrance. It's a problem. You go and you're like, oh man, I got to stop by the cash machine to get cash for whatever. It'd be much easier if I could just pay with my phone, or if they just had contactless payments. And it sounds like that's what these sporting events are really trying to do. It sounds like, huh?
Yeah, it sounds. Visa is a big sponsor of the Super Bowl, which probably has something to do with it. But and it's not just on the consumer point of view. It's for the business. It's a benefit as well. You got to think not having cash greatly reduces your chances of getting robbed or employee theft. You don't have to go to the bank anymore. You don't have to make certain capital investments like having cash registers or a big safe in the back or things like that, for example. So there's benefits on both sides to not using cash. And as technology evolves, it's getting easier and easier to use contact payments and things like that. So it's getting easier for the consumer to use, which has been, in my opinion, the big hindrance up to this point. And I don't really foresee that trend reversing anytime soon.
No, I don't either. And it was interesting. So I put out a poll on Twitter a few days ago because I was reading another article that had done a survey in regard to mobile wallet versus contactless payments. And I mean, it got me thinking. I mean, I wonder if there was a strong preference out there for one over the other. And so I asked on Twitter if you had your choice in the physical world where you have to make a payment, like at a grocery store or a gas station or whatever, would you prefer to use your mobile wallet, your Apple Pay or Google Pay, or would you prefer to use a contactless payment form, like just waving a card and kind of like how we get into the metro here in DC? And because I wasn't really sure myself initially if I had a preference, and it turned out that about 60% of the people prefer using a mobile wallet, a digital wallet versus contactless. And the more I thought about it, I think I'd actually, if I had my druthers, I would probably go with the contactless payment, just because a little card is so easy to pull out and wave, and the less I have to worry about dealing with my phone, probably the better. But I mean, I guess it's either way, right? I mean, they're both convenient, and I like both options. Where do you stand on the contactless versus mobile wallet, Matt?
I like the contactless. I just recently started. I'm actually probably the least tech savvy person that covers fintech. I just got a Venmo account about 2 weeks ago.
Nice.
But I've used Zelle and I've used cash. But I could go either way. Right now, I'm still one of the people who uses cash for small transactions, which I'm in the majority on that. Just to be clear on that.
Sure.
Cash still dominates small transactions. Like, for example, I could never see a convenience store going completely cashless. They would just lose too many customers because that's what they use. But the latest statistic is about 48% of all transactions are now either credit or debit card based. That includes things like mobile wallet and contactless payments. So I'm one of the kind of later adopters, I guess you would say, but I definitely go contactless, especially with how easy it is, especially through some of the newer mobile phones. I just got the Galaxy Note 9, and the Samsung Pay is really easy to use where you can, and it's just becoming so much more user-friendly than it was just a few years ago.
Yeah, and I imagine that'll probably continue to be the case. Now, you were recently doing, because we've talked about the legalities here with places not accepting cash. And I think you're right. I think most places would be smart to always accept cash because ultimately you want to give your consumers choice, right? I mean, the place that gives their consumers the most choices is going to probably generate more business over the course of time. You did some research into the legality questions here. If an entity decides to go completely cash free and how that could play out on the legal side of things, what'd you come up with?
Yeah, it's especially like in bigger cities, it's becoming a real trend where restaurants and things like that are going completely cashless. Starbucks is even testing out some cashless locations in certain areas. I know they have one in Seattle that's completely cashless right now. So this kind of begs the question, is that legal? If you look at the money in your wallet, it says right there, this is legal tender for all debts, public and private. So I did a little bit of digging into that. And the long story short, the Treasury and the Federal Reserve both say that it's completely optional for a business to accept cash. Huh. And there's two main reasons why. First, the wording on the bill itself says that in order for cash to be mandatory to be accepted, it has to be a debt. If it's not the purpose of repaying a debt, then the business has no need to accept it. They gave a really good example involving gas stations. If you go to a clerk, because a lot of gas stations won't accept, say, $50 or $100 bills at night.
Right.
So if you go to the clerk with a $50 bill and say, I want to fill up my tank, they have the right to say no. If they let you pump and then go to pay, then it becomes a debt, and they legally do have to take the money.
Aha.
So that's kind of an interesting kind of gray area. So if they let you kind of get the merchandise first, then it becomes you're indebted to them, and they do have to take it. Reason number two is that although everything that's written on our money is, implicitly backed by our law, there's no actual federal law in the book that says cash is legal tender. Huh. You would think there is, but there's no law, and this comes straight from the U.S. Treasury, that says there is no law on the federal level that says that businesses have to accept cash. It's completely optional. Now, there are some local laws. Massachusetts, for example, has a state law, a lesser-known state law that says that businesses have to accept cash. So you're not going to see a cashless Starbucks in Massachusetts anytime soon. And there's a big push on some local levels. In New York, for example, there's some politicians who say that cashless businesses unfairly discriminate against lower-income individuals. Makes sense. A lot of people in the lower-income brackets don't have bank accounts, don't have debit cards, things like that. And the argument is that you want a fully inclusive marketplace. So that's definitely a problem that would have to be worked out before cashless businesses become really widespread. But yeah, it's completely legal for businesses to refuse cash, which I was surprised to find out, but it makes sense when you think about those two reasons.
Yeah, those are good examples. And Matt, I think you may need to go in there and update your LinkedIn profile there to reflect your legal expertise, because that was some good research there, man. I appreciate that. I'm sure our listeners do too. Okay, let's pivot over to Twitter for the week. We had some fun stuff happening on Twitter, and we always like to shine a light there to some of the good stuff that's going on. And at JG Labonte said, hey, TMF JMO, I found that online checkout using PayPal is so frictionless that I buy stuff before I can talk myself out of it. I bet lots of other folks have this problem too. Next time, I'll try to buy more PayPal instead. Jay, probably not a bad idea. That PayPal will pay dividends for some time to come, but I feel your pain. I know the problem. At every 90 Midwest said, hey, you mentioned you could put 4 more in your War on Cash basket. Care to share what those would be? Are Discovery and American Express 2 of them? Matt, I'm going to give you first up here. If you could add any stock or stocks to the War on Cash basket, what would you throw in there that's not currently in there?
I like American Express just because they do a really good job of kind of spanning the entire spectrum, especially kind of the lower end consumers that I've referred to. Green Dot's one of my favorites that I'm about to talk about. But they've done a great job of like the prepaid debit card market, being really inclusive to, the underbanked, they call people without bank accounts and things like that. So American Express has really been a kind of a pioneer of solutions for that segment of the market. So I would definitely put Amex in there. Green Dot's one I talk about all the time. They're kind of not only focusing on their own products, but on helping other companies offer cashless products to customers. Just to name a couple more, I would actually put Apple in the war on cash basket. Apple Pay is getting bigger and bigger. Amazon's another one just because they're kind of the ultimate cashless business.
Yeah, that's a good point.
And so I would argue that you could put more than four more in the war on cash basket.
But we could probably have like our own fund, man. We could probably build like an ETF with all of these ideas. I like all those names you just said. I would lean towards American Express over Discovery. I just don't think. I mean, Discovery's not a bad business. I just don't know that it has the same. I don't know that it has the same brand power that American Express has, and the optionality to build out new offerings and whatnot. I also was just thinking about this. Berkshire Hathaway. I mean, you could throw that in there as a lower risk sort of play, but they recently made some big investments into the cashless movement, and so that's a way you could participate. And perhaps for a little global exposure, Latin America in particular, Mercado Libre might be one worth looking at because they have their own payment solution there. Mercado Pay, I think, right, or something like that. But it could be a little bit of a higher risk profile, maybe, but definitely gives you exposure to that. So yeah, I mean, a lot of different options out there for investing in that cashless movement. Nice problem to have, I suppose. One more question we got from @CMG Chicago. He asks, gents, any good forums for real estate investors you would recommend? Appreciate your work. Matt, this seems like it's right up your alley, so I'm going to yield the floor to you and see if you can't offer this guy some good resources.
Well, first I need to start off by saying the Motley Fool is going to be your go-to source for real estate before too long. We're launching our real estate kind of sister website a little bit later this year, so stay tuned for that. Listen to the interview with Matty A that you did a few months ago, I think.
Yeah.
For a little more details on that. But just talking about some existing places to go. My favorite's Bigger Pockets. Just all one word, biggerpockets.com. Probably the best real estate social network and just full of resources. If you are a beginner or a seasoned investor kind of looking for more advanced strategies, that's a really good place to go. Connected Investors is another good kind of real estate social network. They're more oriented, in my mind, toward like the fix and flip market than they are just kind of the buy and hold real estate market. But two great resources there. There's a bunch of them, but those are two of the really big ones.
All good stuff. Thanks, man. Yeah, and that was a good interview with Matty Argersinger from a few months back. He gave a lot of good insight as to what you guys are doing. I know you're excited to get that thing going, so stay tuned because that's just right around the corner. Okay, let's jump into what's coming up here for the week. We got our one to watch, taking a look at stocks on our radar here for earnings season. What is one that you are watching this week, Matt?
I'm watching Berkshire. Their ticker BRK-A or -B, depending on how much money you want to spend on each share. But there's two big events coming up within the next couple weeks that I'm kind of paying attention to. On the 15th of February, all hedge funds and companies with big stock portfolios like that have to disclose what they did in the fourth quarter. I have a feeling we're going to see that Berkshire was very active in the stock market in the fourth quarter. They were sitting on over $100 billion of cash in an environment that is Warren Buffett's dream environment for investing. He loves. I wouldn't be surprised if he bought himself some Christmas presents on the Christmas Eve lows there. Especially things like Apple and a lot of his favorite companies that just really took a dive in the second half of the fourth quarter. Beyond that, there's also the company Buffett's closely watched annual letter comes out about a week after that, along with Berkshire's year-end results. We'll find out how much of their own stock they bought back, which has been a hot topic lately, and just kind of Buffett's feelings on the market and where Berkshire might be going. Hopefully he whittled down his cash holdings a little bit. Investors would be really happy to see that, and I think that's exactly what you're going to find out.
All right. Well, we're looking forward to that. And I'm going to go kind of on that same wavelength. There are little baby Berkshire that we always call it. Markel earnings are coming out on Tuesday. Markel, the ticker MKL. Not a lot that goes on with this business on a quarter-to-quarter basis. It's pretty consistent. You got the insurance business. You've got the Markel Ventures side of things. They got their investment portfolio, much like Berkshire Hathaway has. But listeners will recall that there was a little bit of an issue here. They announced there was an investigation into a reinsurance side of the business, and specifically it was in regard to reserves. And so really just looking for any clarity on that and how it could play out on the business here for the coming year. I mean, it's a reserve issue. It doesn't sound like it's anything very pivotal to the overall company. But, hey, maybe it plays out on the book value of the company. I mean, in the short run, and maybe that offers investors an opportunity if there's a little dip in the stock. But it's just, this has been one that we've owned for long periods of time here in a number of our services here at The Fool, and I suspect that will remain the case regardless of what they say with the earnings release. But hey, if the stock does take a dive, investors may want to take a look at it because it is still a very good business. But I think that's going to wrap it up for us this week. Matt, appreciate you as always joining.
Always good to be here. Looking forward to next week.
Yes, sir. And speaking of next week, a reminder for our listeners, next week we will have part 2 of our Between Two Fools interview with Dennis Zember, Ameris Bancorp CEO. So stay tuned for that. Really excited to be able to bring you that. And thanks again for listening, folks. As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. Today's show is produced by Dan the Man Boyd. Enjoying that new motorcycle, Dan. Be careful. For Matt Frankel, I am Jason Moser. Thank you again for listening, and we will see you next week.